Good morning, traders, and welcome. Today is January 25th. My name is Charles, and this is the Pirate Traders live stream. Thank you so much for joining me. Today, we're going to talk about the ES, the NQ, and how they move through the two-way auction process. The auction process is simply a way to analyze the market that makes everything incredibly simple. It is purely a competition between buyers and sellers. We look for opportunities where one of the two has taken control of the market, and then we join the party. So first things first, let's just start by zooming out a little bit this morning and getting some perspective of how we got to where we are. The market had been in a balance area. It had been in a range down here between, say, 47.48 and 48.25, where it was just rotating up and down and balancing on a daily time frame. Okay, it was just spending the days going up and down, and nothing really exciting was going on. Well, we finally broke out of that balance. That created momentum. That created excess, which is the power, the driving force that pushes the market to a new location. Since we did that, since we broke out of balance, we have had signal after signal after signal that the momentum is continuing, that we can keep it going right up until the end of the day yesterday. At the end of the day yesterday, we ended the day with what is called a spike down. A spike down is the market's first signal that momentum on the day time frame might be running out, that the market might be getting ready, bigger picture, to roll over with price. Okay? So I was very interested to see what the market would do last night in the overnight market. Well, what it did was bullish with a capital B. It poked down to test the spike up from the previous day, which was a sign we still had momentum up, and they found support there. That is very important. The place where they found support, the place where the buyer stepped in, is telling us a story. And that story is there is still momentum. We don't need to worry about this spike quite as much because there were buyers immediately waiting. Okay? So that's the first thing I took away from that. Then the overnight market just rotated and traded and played tug of war all night long, all night. Oh yeah, all night long. And they just played tug of war right here around the 4,900 area. Again, very, very important because that was the spike down. That was the area where yesterday's market was telling us, ooh, maybe we've run out of steam. Maybe we've gone as far as we're going to go to the upside. And what happened when that tug of war ended? What happened when those buyers and sellers finally, squeezed one side? It was the buyers that won. And they pushed the market up in the last hour or so. So that is the market telling me we still have momentum. It is telling me this market is still bullish. It still wants to continue to go higher. Okay? So what is catching my eye with that information intact? Well, first and foremost, this node that we just created in here, in yesterday's spike down, should act as very strong support this morning. So if the market comes down in here and it pokes into that node, it should just barely kiss it and then turn around and head right back up. There should be buyers waiting once again to step in there at those levels. Okay, so that is bullish to see. I'm expecting support there. Now, what is important? If I want to be a buyer, if I want to be bullish, if I want to go long in that support, what am I looking for? I'm looking to spend very little time and bring in very little volume inside this node. Okay, we just want to kiss it. No tongue. Okay, no lingering inside of there. The more time that we spend inside this node where they played tug of war in the overnight, the more volume that we bring in there, the more likely that the market isn't going to find support and it's going to head back down for the weakness that we've left behind. So if this area does not hold as support, it will likely lead to a larger pullback. So I remain bullish anywhere above yesterday's low. As long as we make a higher low this morning, I don't care where it is, that is bullish. Okay? So that's step one. The next thing that jumps out at me is we have this very large node of liquidity up here around 49.44 in the Bookmap. Now, we don't know if that's real or not. We don't know if there's actually somebody looking to take profits there. We don't know if there's actually somebody looking to get short there. But the algorithms that drive the day trading market are absolutely aware of that liquidity. And that becomes a target. It becomes like a magnet that tugs on price that says, as long as this liquidity is up here, why don't you guys just come on up? Let's see if there's anybody that wants to party up here. Let's see if this is real business that wants to happen. So that too is bullish to me. If either one of those things changes, if this liquidity up here around 44 were to magically disappear, just spoof away, poof, or we were to get below yesterday's low, I would instantly change my mind and no longer be bullish. But until one of those two things happens, I believe the highest probability is continuation to the upside today. So, are we excited? Are we going long? Are we like, yay, Charles is bullish. Let's all buy, 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 buy. No, we are not. Why is that? Because we opened inside the previous day's range, inside the previous day's value area. So that increases the odds this morning that we are going to get chop, that the market is likely to grind around, maybe for the first few hours of the day, inside yesterday's range before it ever makes whatever eventual move it is going to make, whether that is to the upside or the downside. So as long as we are inside the chop zone, I must be cautious. Okay? I would define the chop zone basically as this box right here. Okay? So anywhere below 49.21 or anywhere above, let's say 48.95, that is the chop zone. That is where it is likely to grind and grind and grind, driving us all mad. Now, if they're able to get above the overnight high at 49.21 and find some support up there, well, that's bullish, right? New buyers above the overnight high could break us out of this chop zone, and then that would target a move to yesterday's high, okay? But until I visually see that support, until it is confirmed to me that we have broken out of this chop zone, I believe the highest probability for the next few hours is just grinding around inside this range. Okay? So sit back, relax, and enjoy the chop. 'Cause it's a chop zone. And they'll chop it up. So whenever the market is in a chop zone, basically all I'm doing is trying to gather information to carry forward. So I'm watching support and resistance levels. Does it get support? Does it get resistance? Right? That's very important to understand. Where does it get support? Where does it get resistance? You know, and then of course the halfback. The halfback is 50% of whatever the current range is. So from whatever the high and the low is of the current range, the halfback is the 50% mark. Often, if the market wants to break out of a chop zone, it will turn that into support or resistance first. If you have not yet, please smash that like button. We are public. We're out here for the world to see. And it sure helps out the channel if you guys can hit that thumbs up. Appreciate ya. 'Cause it's a chop zone. Whap, whap. Ken says, Q, please. Ken, why didn't you say something before I drew all the lines on the chart? Oh, no. I forgot about the NQ. Let's take a quick look. Why not? Ignore these lines that I've drawn on the chart. All right, so man, NQ, even more bullish. So the NQ never filled their gap yesterday. So they still have that gap and go momentum. That is very bullish to see. And once again, they didn't even need to fill it in the overnight. Even when they got some pullback, it didn't go anywhere. Didn't even fill the gap. Very bullish to see. So I would describe the NQ and the ES in exactly the same position this morning. Chop zone between yesterday's low and the overnight high. I know it's a very large range, and that can be frustrating because you could watch the market move, 100 points and not be in a trade, but that's okay because breaking out of this zone will either lead to continuation higher or a pullback in price. So let them chop it up this morning. Let them grind around. Wait until we have confirmed either bullishness or bearishness and then carry that forward. I suspect the node, the very large node, it's almost identical to the ES around 17,611, will act as support. And of course, if they can get above the overnight high around 17,720 and find new buyers up there, that would be bullish for continuation. So both markets in a chop zone, both markets require some patience this morning. We don't need to FOMO into trades first thing. We can wait for confirmation. We can find entries with minimal risk and maximum rewards and then take advantage. Because it's a chop zone. Good morning to Alyssa, Eric, Philip, Jerry, Tim, Mike, Grizzly Bull, Holger, Guten Morgen, Jack, Ships, Arjit, David G, Jay, Bust a Move, Debbie B, Scalping Strategy, Malang, Laura, Arjit, Sean, Frito, Percy, Sean, John, Fred, and Nicholas. Welcome one, welcome all. If you have not yet, please smash that thumbs up for the pirate. Got 106 amazing humans hanging out, only 52 likes. So what half of you just don't even care about me? Welcome, Henry Gunk and 200 dogs. John, cold. Yeah, these people, man. Cold as ice. And one day they'll pay the price, I know. RK says more treasury bills today at 11 to 11:30. Well, we'll look out for some volatility there for sure. If you guys have any questions about anything at all, feel free to hit me up in the chat and I will do my best to answer them. Odds are it's going to be a little boring here for the first hour as we chop and grind inside this range. So any questions, I'm happy to field them. About the markets, not me personally. WSS, good to see you. I haven't seen you in a minute. He says 1 p.m. expected to be a big 7-year note sale. Well, whatever happens, happens. You guys know me. I'll just see what's happening in the chart and take advantage. Percy says, can I do my magic on Tesla and NVIDIA? Not exactly, because I haven't paid for data for individual stocks, so I can't pull them up on my market profile. But I can take a look at them on the daily, that's for sure. Oh, that reminds me. 11 days to the next workshop. If you've been struggling with your trading and you're looking for some support to take it to the next level, I teach a workshop that is all encompassing. It is everything. How to read a chart, how to develop a setup, how to deal with live markets, and of course, how to improve based on your personal psychology. So that happens in 11 days. And the discount, it's $100 off right now for early bird special. That ends on Saturday. There's a money back guarantee. If you change your mind between now and the beginning of the course, I'll give you your money back. So you might consider signing up now to get that early bird special. All right, so let's take a look at Tesla. Ooh, not looking good. Yeah, Tesla's just definitely not buyable here. So basically, I'm going to have to delete those. Okay. So essentially, bigger picture, right? We're talking about like on a monthly basis, the market is balancing. Okay. So what does that mean? It's playing tug of war, right? The buyers and the sellers are competing and they're trying to decide who will win. Inside this balance area, it's like a very giant chop zone where the market is trying to decide. So far, the sellers are taking control. They are beginning to create lower highs and they are beginning to break through potential support levels one after another. So that is telling us the market needs a larger pullback to bring in those buyers. So my guess is they're looking to test 180 and see if they can bring in the buyers there. A look below and fail of 180. So if the market were to poke below there and then say, over the next few days, come back up through, that would be buyable because that's a look below and fail. That is like sort of like a slingshot that'll fling the market up. And you just left behind this massive gap this morning, obviously because of earnings. So that could be an excellent opportunity to go long for a bounce. But I wouldn't short here because I don't know how much further down they're going to go. They may get to 80 in reverse. And I wouldn't long here yet until I got that failure, that look below that fails. Then I'd be worried about heading up and filling that gap. If you're a day trader trading Tesla, I would not buy it unless it got above the overnight high and found support, whatever that may be. Or they don't have overnight. So yeah, basically above the current high at 192.89 and brought in buyers up there for a gap fill. But otherwise, it may just be a good time to step aside. All right, let's take a look at NVIDIA. Obviously very bullish. Boy, look at NVIDIA. Fucking 14 years of straight up. Wow. Yeah, I mean, NVIDIA's way overextended. If I was long, I'd stay in it to see how far they can push it, but this is not a time to buy nor a time to sell. Both markets, dude, there's no business to do today. So NVIDIA could keep this going for a while. But it's so overextended, right? That's so much excess that they need a pullback. They need to either go sideways at higher prices for a while, so maybe spend a couple weeks going sideways, or they need a pullback with price, a dip to bring in more buyers. So you're chasing if you're thinking about going long up here, and you're shorting against momentum if you're thinking about going short. Sorry, bro. Okay, so I'm looking for some resistance here on the ES literally right now at 49.18, just below the opening price. If the market pokes through the opening price, we will almost certainly get some short covering that will get us above the overnight high. And then we'll find out, are we ready to break out of the chop zone or not? So I suspect that the sellers don't want that to happen, and they will defend 49.1850. To keep the chop zone, chopping it up. Quiet Time says, how long have you been a trader? Well, are you asking how long I've been trading or how long I've been trading profitably? Because those are different questions. I've been trading full time for about 3 years. Arjit says he enrolled in the course. Happy to have you, brother. Going to be a good one. Ship says, how much is the workshop? It's a good question. So if you buy it now, it's $345. But if you wait until Sunday, it's going to be $445. So that is food for thought. Now, if you're thinking, Charles, $345 of my hard-earned money, plus 2 whole weeks of my time, that is too big a commitment. I just could not do it. Well, you're as wrong as can be. That is nothing compared to the money you can save, knowing what mistakes to avoid, and the money you can make once you develop a winning strategy, which is what I teach you how to do. And 2 weeks is a lot of time. It's many hours you have to put in, but the course is so in-depth, it takes that long because I've jam-packed it with so much. I do declare. Al says, can you take a look at Bitcoin? Yeah, I don't have any great advice on Bitcoin right now. I feel like there's too much uncertainty, but I can look at a TA look at it. right. Yeah, so that could have been the support 2 days ago around 3,900, but they've got to keep this momentum going on a day time frame. So they don't want to get today's daily candle below yesterday's candle. If they get today's candle below yesterday, they're going to look for a larger pullback. But if they can hold it, they should be able to turn around and head back up to 4,200, looking for resistance there. If they can get through that, it's green light to head all the way back up. Okay. But it wouldn't surprise me if they needed to spend a little more time down here grinding in, bringing in those last stronger hand buyers before they get continuation higher. You can see I've got some things marked on the chart here. First and foremost is previous support and resistance, which is very reliable for the Bitcoin. And then we have this trend line up here. So once we broke through that trend, that was a change in the market. We fought and we fought and we fought to get through there. Once we got through, it was, very bullish. Came back down, turned it into support, and that took us higher. So one would expect there'd be buyers waiting there once again, right there around 3,800. Very nice. I like very much. John says, got a buddy that bought 5K back in 2007. Do the math. I assume you're talking about NVIDIA. Yeah, I got a friend too who bought tons of Apple back in like 2004. And man, he's done really well on that. Like put his kids through college well. Sean says, chopping broccoli. We are chopping broccoli, but what are we observing about this chop? We are spending all the time and bringing in all the volume on the upper end of the chop zone. It shouldn't be that hard for the market to poke down here and test 4,900. But they are having an awfully difficult time doing it, aren't they? So there are buyers stepping in. So it's too early to say for sure, but it's feeling bullish. T. Craig says, I took the course in December and it was fantastic. Thank you, brother. Ship says, what time is the class? So it's from 11 a.m. to 3 p.m. each day, but the videos are all recorded, so you can just watch it anytime you want. If you're not watching it live, you won't be able to ask questions live, but the videos are available anytime. AD says, I took the workshop last summer and it was well worth it. I'm profitable almost every day now and also know when to step aside and let the algos fight it out. Music to my ears, brother. Happy to hear it. Mike says, Charles, how did you determine today was a chop day? Because we opened inside the previous day's range. Okay. And inside the previous day's value area. This is the previous day's range. This is the previous day's value area. We think about that as essentially a fair price to do business. So at the end of the day yesterday with the spike down, the market tried to change that. They tried to say, oh, we don't want to do business up here, right? They tried to say, we need to go lower to do business. But the overnight market said, fuck you, bro, and just took it right back up to the fair price, which is where we opened. So that means there's tug of war happening Tug of war at the end of the day yesterday, tug of war in the overnight. What on earth should we expect this morning? More tug of war, right? We should expect that to continue. So we look for a chop zone. All right, we got some news bots creating a little volatility here. Is that enough to pass back through the opening price? Let's see. Passing through the opening price should get us above the overnight high. If not, more chop. DNK says A high is weak. Correct. Yes, it is. Weak because it stopped right at the overnight high. Doe Smith says, I took the course in December and it was fantastic and well worth the time and money. I'm on vacation for the second week, but was able to go back. Oh, he was on vacation for the second week and was able to go back and watch the recordings, learn so much. Do it. I agree. Do it. Marketsinmind.com. Do it. Joe says, one point about the workshop, all materials and lessons are still available to me. Took the workshop in December. Have completely watched it twice. Completely changed my trading. Happy to hear it, brother. So one tool that I like to look at is called the tick chart. The symbol is TICK. And essentially what the tick chart does is it shows us what's happening under the hood of the market. It shows us the buyers and the sellers second by second, minute by minute, on the actual NYSE exchange, on the actual exchange level. So it kind of gives us some perspective. We're looking at the futures over here, but seeing what participants are doing at the actual, exchange level gives us a little bit of an idea of, are the two in alignment? Okay. So far this morning, those ticks were doing what we call finding support at the zero line, which was a little bit bullish to see. The fact that they are now poking through the zero line and spending some time below it, that is telling us we need more chop. So it's probably going to be a couple of hours in this chop zone, which is not super exciting, but acceptable because we understand what the market is doing. And that's what gives us the edge. Chopping broccoli. No Faith says, do you see the NQ leading the ES or the ES leading the NQ in general? The answer is no, I do not. They do tend to work like that, right? One kind of tends to pull the other one along. One kind of tends to generally lead the other one. Like I would say on a daily time frame for the last couple of weeks, the NQ has been kind of like a little bit ahead of the ES, and the ES has been kind of following suit. But when it comes to day trading, I don't think it's valuable at all, because some days the ES seems to be in control. Some days the NQ seems to be in control, and I have no way of knowing which day is which. So if I'm thinking about entering a trade, short right now, because I see the NQ going down, so I'm going to go short on the ES, I have no idea whether this is a day where the one is going to lead the other or vice versa. And there are days where they do the exact opposite. There are days where the Q goes up while the ES goes down. They're not as common, but when they happen, it can be very, very frustrating. So every single thing that I use in my trading as a way to analyze the market and as a way to make decisions about what I think, are good opportunities to enter trades, all of those things are things that always have an edge, meaning they work out more than they don't all the time. So it doesn't matter whether it's a, grindy, slow market, a wild, volatile market. It doesn't matter whether the market is rotating or the market is trending. These things work with a higher percentage of the time in any market, always, every day. And so something like that, the push-pull between NQES is totally random. And so it's just not helpful because you never know what's what. Whereas a chop zone, like we've talked about this morning, opening inside the previous day's range, opening inside the previous day's value, that will happen like 80% of the time, no matter what. That will chop if we open in the previous day's range and the previous day's value. So that is a much more reliable signal that will be right more than it will be wrong. So everything that I teach in the workshop is those things that are based on statistical probabilities. RK says, like and share or face an angry parrot. Am I the parrot in this analogy? I don't know if I could take that as a compliment. Fair enough. Okay. Would you look at that bounce on the ticks? Bullish to see. Can we get through the opening price? Or does the chop continue? There you have it. All right, that is bullish to see. Passing through the opening increases the odds that we're going to poke above the overnight high at 49.20. Getting above there gives those buyers a chance to bring in support and continue higher. We, of course, need to see that support because there is always the chance they can do what we call a look above and fail, which is where they poke up there to see if there's buyers and there just aren't. And then it fails and it comes right back down. So we want to see them get above 20 and come back down and find support. That is bullish to see. Let's see what happens. Percy says, cover thy short. Yeah, not yet. We haven't quite squeezed anybody yet. But let's find out. If we can stay up here, we certainly will. There you go. Took out somebody with 400 or 358 contracts. Sorry, my dude. And by my dude, I mean probably a computer. Okay, so we're looking for this support. We need these ticks to hold the zero line. That would be a sign of buyers stepping in. If price pulls back in and the ticks push below the zero, we're going to get more chop. And that's what's happening. Yep. More chop. Nando says Meta looks good for now. Man, blue skies on Facebook. Interesting. Yeah, it does. Yeah. Man, if they can get above yesterday's high, that thing could take off. You get a lot of short covering up there. Bullish to see. Debbie says, come on, all 117 watching and only 68 likes. I know, Debbie B. Although we do have 69 likes. Maybe we shouldn't get any more. Oh, nope. Somebody ruined it. 8 of you ruined it. Okay. So ticks once again telling us we need a pullback into support. We don't have the buyers to take it higher just yet. Next support is 49.17. That is the halfback. It is quite common for the market before it breaks out of a chop zone to find support at the halfback. So we're looking for buyers at 17. Can they hold it? All right, back above the overnight high, round 2. Ding, ding, ding. Can they turn it into support this time? Or more chop? Armando says shameless plug. Listen, shameless plugs are always welcome here at the Pirate Traders community. Okay. He says, I took the course in December as well. I did not know what to expect or how good the content would be. Charles way over delivered on content and topics you would not have thought of. That's the thing. Everybody thinks being successful as a trader is about learning to read a chart. Learning to read a chart is step 1. It goes so much deeper than that. And there's really very few people willing to teach the other stuff you got to do. Not me. I'm not scared. Okay, so we are seeing some volume right at the overnight high here at 49.20. That is a sign of business taking place. If they can pop these ticks back up right now, I will be bullish. There it is. I am officially bullish, ladies and gentlemen. I believe the highest probability is that the market is heading up to test yesterday's high at 49.33. I will change my mind if the market pulls back down into the overnight range and this node right here between 49.17 and 49.12. If that fails to act as support and the market breaks through, that's where I know I'm wrong and I should not be bullish. But as long as this holds as support for the rest of the day, I'm bullish to test yesterday's high. Let's see what happens. All right, so we're getting some short covering here. Squeezing those sellers from the overnight who are finally giving up. That increases the odds that the buyers are taking control of the market, and that support will hold. Sevma Reach says the Q is pushing above its overnight high. Bullish to see. So same thing as the ES. Is the chop over? Can they turn this into support? Pretty much anything above, say, 17,722, or do they look above and fail? Like the ES did. If they look above and fail, they need to chop a bit more. If they can turn this into support, it is bullish as well for continuation higher. Can they hold it? Man, new buyers at the high. Bullish to see. A little FOMO. Still looking for the market to come back and test that overnight high one more time, giving the stronger hand buyers a chance to step in. SS Cryptocurrent says DXY heading up to test short-term resistance. I don't know. I don't really ever look at the dollar, to be honest with you. Yeah. There's too much. This isn't great for TA because there's just too many factors that affect the dollar. So, can't really help you there. Not my expertise. Remember, my edge, the advantage that I have, is the two-way auction process. It is being able to recognize momentum. It is being able to say more people want to buy this asset than sell it. And the US dollar just has too many derivatives attached to it. It's just too hard to read from an auction process perspective. So it doesn't interest me. No Forex does. More FOMO buying. So what do I mean by FOMO buying? I mean that the people that are going long right now, they're chasing trades. Okay? They watch the market move up, boop, 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 and they're like, oh no, I got to get long, I got to get long, I got to get long. Those traders often get squeezed. The stronger hand traders are the traders that can watch it poke up and then have the patience to wait for it to come back down where they can get in with much less risk, right? So think about it like this. If you're going long right now, let's say you're going long here at 24 and you're looking to take profits at yesterday's high at 33, where are you putting your stop? I mean, the market could pull all the way back down and still turn around and go back up. So you would have to have a very wide stop in order to enter that trade. Well, then you're risking more than your potential reward. So that's not smart traders. That's not experienced traders. Whereas if a trader were to wait and be patient, they were to use that move up as a signal that the buyers were taking control, and then they were to buy support, they could be risking much less for a larger reward. So those traders that buy down here in support are going to have more experience, they're going to have more discipline, and they have a much higher probability of the trade working. So they're going to be more confident. So when I see FOMO like this, I always assume it's got to pull back down into support. Now, that doesn't mean it will. Sometimes FOMO buying brings in more short covering, which brings in more FOMO buying, and the market takes off. It can happen. But what is more statistically probable is that the buyers get squeezed, the market gets a little pullback, and then the stronger hands step in. The fact that we've left behind a set of single prints from the B period, that is this little area right here, where there's only one letter. See, there's two letters here, two letters here, only one here. That is what we call single prints. That will give us a sign of what is happening. If the market just immediately pushes up and it doesn't backfill those, then it is short covering and FOMO buying. And man, that thing can just keep going as long as they keep doing it. But if it pulls back to fill those single prints, likely there will be buyers waiting, and we'll look for support at the base of those single prints. Thank you, SS. Appreciate you. Sean says, do these live streams stay published for later review? Yes, sir. This one will be on the public YouTube forever. All right, so we just squeezed those FOMO buyers. Now we're looking for those stronger hand buyers to step in. Remember, the fact that we were able to push above the overnight high and bring in buyers is a sign the buyers are in control. So this support should hold. If it breaks, well, then we were wrong. We're looking for support anywhere between where price currently is and 49.14. And we will see that support because the ticks will reverse and head back up above the zero line. All right, moment of truth for the buyers. Can they hold it? Whew, dancing on a razor's edge. Nope. Sorry, guys. They don't have it. That is a second look above and fail of the overnight high, which was probably caused because of that look above and fail of the NQ's high. So that means, dun, 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 more chop. They're not quite ready to take it higher yet. So the next question we have to ask ourselves is, does previous support become resistance? So the overnight high was working as support and it failed. So now does that become resistance as we push back up into it? If not, we get back above it, we look for support again, and the move continues. If it's resistance, more chop. All right, so this is a great opportunity to talk about the idea of being like water. Water just becomes whatever it's put into. If you put water into a glass, it becomes the shape of the glass. If you put it into a teapot, it becomes the teapot. The water can instantly change from being one thing to another. We as traders want to be like water, my friends. So in this context, what am I thinking? Well, we had chop and the buyers won. They took the market higher. So that turns me into a bull. I'm bullish. Okay. But I know if the bulls are going to stay in control, they've got to hold this zone of support, which it sure looks like they're not going to. Okay. So if the overnight high were to now become resistance, I would have to change my framework. And I would have to say the bulls aren't really in charge. We need more chop. We need more grind inside yesterday's range. Okay. So that would get me sort of neutral. Resistance at the overnight high would have me feeling like, listen, I don't know whether we're going to break up or down. But if that resistance were to hold, okay, and then the market came back down and broke the A period low, well, then I'd have to become a bear instantly, right? Because now it's the opposite of what I thought was happening. We should have been able to find support and continue higher, but the fact that we couldn't means the market needs that larger pullback into the next big node. So right now I'm bullish, But if we can't get through, can't get back above the overnight high, I will be neutral. Okay. And then if we break the A period low, I will be bearish for a pullback. And I have to be willing to change my mind very, very quickly, because the market can change its mind instantly. And I would say it just did that with the fact that it made that weak low in the C period right here. And they got that look above and fail on the NQ, means the bears could be taking control right now. So I'll be bullish if the bulls can poke through the overnight high, and it's no big deal. But if that holds as resistance, I got to be neutral. And if they start to get the momentum, I got to join the bears. I must be like water. As long as I'm in the teapot, I'll be the teapot. But as soon as I get poured into a glass, I become the glass. Let's see what happens. No Faith says, my overnight high is 49.04. What is yours? It's this right here. So this is the overnight range. So that is my overnight high. We'll call it 49.2050. I consider the overnight everything from 4 p.m. the previous day up till 9:30 a.m. this day. Fred says, rum reacts the same way, Charles. Stay on theme. I know, but it's a famous Bruce Lee quote. Sean says, can you elaborate on how you use the tick chart? Rookie question, but what exactly is it a measure of? Does 0 represent even distribution up and down on ticks or something else? Yeah, so the ticks is, and you guys can correct me if I'm wrong here, I think it's up volume minus down volume. So it's like the number of people that are going long all the stocks in the entire NYSE versus the number of people that are going short all the stocks in the NYSE second by second. So if it's above the 0 line, so the 0 line's right here. If it's above 0, it is a sign there are more buyers. Like in general, there's more people buying right now at this moment. And if it's below 0, it means in general, there's more people selling at this moment. And so the way I read it is looking at two things. First and foremost, is it above or below that 0 line, right? And then also, is there some kind of momentum in it? So right now, the ticks are actually trending lower, right? So that is telling us that slowly but surely, the more time that is passing, there are fewer and fewer new buyers stepping in, and there are more and more new sellers stepping in. That's fine. That's tug of war. That's what we're getting. Okay. And also the fact is that we are just crossing through that zero line again and again. We came down and crossed through to the downside, crossed through to the upside, downside, upside, downside, right? So again, that is just a sign of tug of war. So the ticks can be very confusing if you just sit and stare at them all day. If you're like a scalper, I do not recommend using the ticks. They can drive you mad. But if you operate on a slightly slower time frame, they are an excellent sign of whether support or resistance is holding. So this is our area of support right now. And look what the ticks just did. Price pulled down into support, right? The ticks, while price was pushing down, they were going down. But then what happened when we got there? Those buyers started to step in. They've gotten those ticks back above the zero line now. So that is bullish to see. So now I'm looking at the ticks when we get to the overnight high. I'm not looking at them between then and now. Who cares, right? But when we get to that overnight high, I'll look again. What are they doing from that moment? Are they going down or are they going up? Down would tell me resistance. Up would tell me that we're breaking through and we're going to get continuation. The ticks are something that require two things in order to learn to use them. First and foremost, you have to spend a lot of time like watching them. You have to watch them every day for months before your brain will really be able to comprehend how they move and how they're useful. And the other thing is you can't use them as a sole piece of information. You can't purely say, if the ticks are going up and they're above zero line, I'm long or short. It always has to be in correspondence with a support or resistance level, which is based on price, right? Where does price go? Where does it spend the most time? Where does it bring in the most volume? That's your support or resistance levels. The ticks just tell you whether it's acting as support or resistance once you get there. Of course, all of that is taught in detail in my Markets and Mind workshop. 11 days away. Faith says, my 4 p.m. close yesterday was 49.01. When did the ticks go? It was like literally a few minutes before the market opened. It was like 9 a.m. this morning that this move happened. So again, it's all the way up until market open this morning. So when the market opened at 9:30 a.m., we were here. We were up at 49.19. Okay, so the ticks are telling us resistance, which is telling me to be neutral. So right now I am feeling neutral, unsure of who's in control of the market, looking for more information. But if we break the A period low, that's all the information I need. That will turn me bearish, assuming we need to head down and test this node from the overnight around 4,900. So I am neutral in here, uncertain. If we get back above the overnight high, can we turn it into support? Support would get me bullish, or breaking the A period low would get me bearish. But right now, I'm going to let them diddle in the middle, as there's too many mixed signals to be sure. Clipper says, how do you utilize Bookmap? It's a great question. Again, kind of hard to teach. It's something that you just got to kind of put in the screen time. But essentially, there's two main things that I'm looking at when I'm looking at the Bookmap. The first is what's called the heat map. So the heat map is all the colors, all the little differentiating colors that you see around here. So you got like black, blue, orange, right? That's the heat map. Okay. And quite simply, it's just the brighter the color, the more liquidity, right? The more orders sitting in the order book. And so if you see this little white line that's running down here, boop, 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 that is basically showing you the current order book on the left, and then on the right, and then on the left, that is where the liquidity was at that particular time. Okay, so this is really important. Again, it's very subtle, and there's nothing exact about it. But by watching how the liquidity changes and where it changes can give me clues of who the participants are and what they are likely to do. So, for example, you've got tons of liquidity up here, right? The market came up into it, and then what happened? Poof, it disappeared. Okay, so that told me that that wasn't real liquidity. It was a spoof. Okay, so these little hints along the way of like what's happening, who's in charge, that's one way that I understand it, is like, does the liquidity actually fill or does it disappear? And then what's happening as bigger moments happen. So a lot of times what you'll see is like a market will be grinding up to a certain level and there'll be a huge node of liquidity. I don't think there's any examples from today. And then when it gets to that certain level, boom, the liquidity somewhere else disappears. That tells you it's fake. It's not real. It's going to reverse. It's going to come back. The other thing that I look at is what's called the stops and icebergs plugin. And basically the stops and icebergs show me when a single account is trading with very large size because of the way I have my settings set up. So all these numbers that you see, that's one account doing that. So when you see the little green triangles, that is an iceberg that is going long. When you see the little red triangles, that is an iceberg that is going short. And when you see the little circle, if it's a green circle, that is a seller getting stopped out. And if it's a red circle, that is a buyer getting stopped out. And then the numbers are showing you what size, what position size is getting stopped out there. Well, why does that matter? Why do I care about that? Well, because there is two types of participants who use icebergs. Okay. The reason they call it an iceberg is if you think about the ocean, right? How does an iceberg on the ocean work? You see a little tiny bit of the iceberg above the water, but the much bigger iceberg is under the water and you just can't see it. You don't know how much there is. Well, these iceberg orders, the way it works is a computer just puts one order, one contract in the order book. But then when the market gets there, it starts adding more instantly. So you don't actually know how much liquidity is waiting, right? But knowing that they're doing something there tells you it is either a large player who is trying to hide the liquidity or an algorithm, right? Because all the computers use this system to do it. So that tells me if the market is making a move, is it more, fake? Is it computers just trying to squeeze me? Or is it real buyers stepping in and pushing the market higher? The more of these icebergs that I see, the less I trust. If the icebergs are support, the less I trust the support. If the icebergs are resistance, the less I trust the resistance, because it's not real sellers. It's just day trading bots trying to make a quick buck. Also, if I see a humongous size stop like this one up here, 380 contracts, I know somebody with deep pockets just got squeezed. That gives me a bigger indication that there might be a change in the market coming. Somebody with size was wrong. A lot of things are going to get repositioned. Okay. So speaking of which, at this exact moment, the buyers want to hold this A period low. They do not want the market to start trending lower here. So what did they do? Iceberg, right? They're trying to hold the market up there. When that disappears, boosh, probably all this liquidity disappears, boosh, and then the market goes down, boosh. Let's see what happens. I'm talking about an iceberg here in the book map. Another thing that jumps out at me is this little, so you can see there's two numbers here on this iceberg, okay? The number 2 is showing me the number of contracts that traded so far. That's how many the iceberg has allowed to fill so far. It got one, boop, and then another one, boop, all right? So I don't know how many will fill there, but I just know they want more business. They put another order in, okay? And then the little number inside the brackets is telling me how many computers are doing business there. In this case, it's just one. But if I were to look at there and see there were 7 different computers or 9 different computers all trying to buy that exact level, I would know shenanigans are afoot. And that's what I'm saying. I'm just asking myself these questions. What's happening? Who's in charge? How good of a job are they doing? And if I don't worry about trades, I'm not sitting here saying, should I get long? Should I get short? Where should I put my stop? I'm not thinking about any of that. I'm just saying who's in charge, what's happening, what's likely to come next. All of a sudden, a trade will just come to me. Out of nowhere, I'll just see, oh man, that iceberg just broke. That liquidity just spoofed. Oh man, now we need to pull back into here. We're one time framing lower. Dude, I should definitely sell some resistance. And so instantly, the idea of the trade just comes to me because I'm not searching for it. I'm just stepping aside and waiting until the information tells me what's going on. All right, if the ticks pop down right here, it's new sellers at the low. That would be bearish. There it is, bearish to C. So now we're back to talking about this iceberg. Once we poke into it, does it hold again for another bounce or does it disappear? If the iceberg disappears, likely all this liquidity spoofs as well. And then the market has no support. Let's see what happens. Do a little dance, make a little love, squeeze all the buyers, ooh, squeeze all the buyers, ooh. So what my brain is screaming to me right now is everyone that's going long in here, where are their stops? Right below that 8-period low. Boom, there you go. Iceberg disappears, watch. Liquidity will disappear, watch. We'll shit right now. So that iceberg wasn't real. That wasn't a real buyer trying to reverse the market. That was a computer trying to get you to go long in here and put your stops below that 8-period low. And I don't know how many times they're going to keep doing it. They may keep bouncing and bouncing and bouncing in here, getting more and more and more stops. But to me, that is bearish to see, increasing the odds they're going to break lower. Let's see what happens. The market has also just created what we call a poor low. A poor low basically just means that the market is likely to first push away from the level. So we would first expect it to bounce, but then find resistance and come back through the low. Rocky, been a while? Yes, sir. Good to see you. All is well. Ram V says, market is trending down, question mark? No, sir, not yet. So we are still inside the initial balance. Obviously, it does seem like the probability of breaking lower is significantly higher than the probability of breaking higher at this point with that poor low and all those stops waiting down there at the 8-period low. But trending, air quotes, is a technical signal, which we have not started yet. So we got to get some resistance, and we got to get below that A period low. If we can, then we're trending. Right now, it's just chop. It's just the market playing tug of war, trying to figure out who's going to win. All right, so I'm seeing 49.1650 as the first potential resistance here. Do those ticks get smacked back down? Resistance is holding. Man, this is the most boring, choppiest, tightest range possible. It's like the market gods know I went live this morning. They were like, oh yeah, Charles? Oh yeah? Well, we're just going to go nowhere. Okay, resistance is holding. Ticks are back below the zero line. That is bearish to see. So now I'm going to switch back to the Bookmap, and I'm going to watch that node of liquidity just below the low. To spoof or not to spoof? That is the question. The idea being, as price works its way back down, does this disappear? Or does it stay there? Or even get darker? Let's find out. Core says going nowhere is a core concept in trading and being profitable. Yes, having discipline and patience and not forcing trades and waiting for the market to give you the lower risk opportunity. Absolutely. But as a live streamer, it makes keeping the live stream interesting much harder. Because it's all just questions. Is it going to hold? Is it going to break? Is it going to hold? Is it going to break? It's like we just got to wait. And the waiting, whilst it's easy as a trader, is hard as a streamer. Andrew says, ES pour low, NQ pour high, chop chop. Yep, right now, tug of war. All right, looking for resistance here once again at the halfback, 49.1850. What happens to those ticks? Do they get smacked down again? In moments like these where I find myself feeling frustrated because I just want an opportunity to get in a trade so freaking bad and the market just won't give it to me because there's so many mixed signals and so much uncertainty and so much slow grind to nowhere. I always remind myself that when the market is in this type of zone where it's grinding around in a tight range, half the participants are going long and half the participants are going short. So I can't know when it's going to break, and I can't even know which way it's going to break, not yet anyway. But what I can know is whichever way it breaks, it is likely to get continuation because anyone who, let's say it were to break to the upside, anyone who's been going short will get squeezed and then boop, 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 boop. We instantly turn every seller into a buyer if they get squeezed, and vice versa. If the market pokes down through the low, I know we're going to get some follow through because anyone who's been buying becomes a seller as they get squeezed. Boop, 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 boop. So I have to be patient. I have to wait, but I will be rewarded for that once the market finally breaks. And I just remind myself of that. Man, tricky, tricky, tricky. So no resistance here. This is just pure chop. All right, so here we go. Both markets once again testing the overnight high. Third time for the ES, second time for the NQ. Is it going to be more chop, or can they finally turn it into support? Let's find out. Ram V says the 7-year auction is at 1 p.m. Eastern. I guess chop until 1 p.m. It's not an unreasonable assumption, but I do not believe we'll stay in the initial balance. So I think even if you're right, we should break the initial balance and either head up and test yesterday's high and then come back down, or head down and test this node at 4,900 and come back up. I don't think we're going to stay exactly in here until 1 p.m. Again, I just want to emphasize, there doesn't have to be a reason, right? There doesn't have to be any outside reason for the market to break away from here. Just the fact that there are so many traders who have chosen to get long or chosen to get short, right? A lot of them are bored. They've been sitting here and they're just desperate to get into a trade. And so they've picked a side, means that half of those traders can get squeezed. And so all it's going to take is one little break higher or one little break lower, and you can squeeze half the traders. And so I highly doubt they're going to be able to keep it in this tight of a range until 1 p.m. Now, I could be wrong. It's only an hour and a half away. But I just know every minute that goes by, these short-term traders are getting more and more frustrated, more and more emotional, more and more likely to get squeezed, more and more likely to get whipsawed. It's just the mechanism of the market. So I'm in neutral mode, and I got to force myself to sit back, relax, and wait for the break, and know once it does, excellent opportunities will present themselves. And if I have to wait till 1 p.m., that will be very frustrating, but might be the case. Sid says, what is a poor low? A poor low is where the market reverses itself almost exactly at a low or a high of the day. So you can see here, this was the A period low. This was the low in the first half an hour of the day. When the D period came down, it reversed literally half a point away. It just turned around and went right back up. It is very rare that that's going to be real buyers. You know, that actual human beings like you and I really want to buy that level. That is almost always going to be bots. It's going to be computers. And those computers, they have a certain way they operate, a certain mechanism, which is they often, and again, this is not always. You need to understand when I say these things, it doesn't mean always. It just means more often with a higher probability. What they are doing is they are intentionally making a low at the low of the day to convince short-term traders that it's a double bottom. Short-term traders see that low. The market does this, right? It reverses and it starts coming back up. Boop, 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 boop. And what are traders doing? Well, they're going long here and they're going long here and they're going long here. And I bet you there's somebody going long right now. And all those traders, where are they putting their stops? Right there. So we can't see it in the order books, but there is a lot of shorts that will enter the market if the market can get down to here, because their stops will instantly start to fill. So those bots know if they can keep bouncing and bouncing and bouncing and bouncing at an exact level, they are creating liquidity to take the market lower. So I can't guarantee you that we're going to come through and take out that poor low, but it is the highest probability. Now, what somebody just pointed out in the chat is we have the opposite on the NQ. They did it with the high on the NQ. They brought it up here in the B period, and then they reversed exactly at that B period high in the C. So the assumption there is sellers saw that as a double top, started to go short, started to go short, started to go short. Where are their stops? Up there at the poor high. So that's the mechanism that's keeping the market stuck in this tight range. Is there's one magnet on the high on the NQ, and there's a magnet on a low on the ES. And so we're stuck just watching the two play tug of war with each other. And then whichever one gets taken out, you get some follow through. So if we poke through the poor high on the NQ, you'll squeeze all those sellers. Their stops will be up there and you'll get a little short covering. Boop, boop. the market will pop up. But wouldn't it be interesting if it were to do that, boop, boop, pop up, and then turn around and fail and pull right back in? Because then the ES could turn around and do the same thing. Right? So it follows NQ up a little bit. NQ looks above and fails, and then ES comes right back for that poor low. That is kind of what this feels like, which is why I'm neutral, because it's just so uncertain. It could be that that short covering in the NQ brings in new buyers and the market keeps going and we never come back for this poor low. But that's not the plan right now for those bots. They're hoping that they can come back for those stops. And a weak reference is a similar concept, but it's inside the range. So poor is at the low or the high of the range. Weak is the same thing, but inside the range. And it works very similar. It just increases the odds. They'll come back and poke through there because there are some stops. Man, it's like watching paint dry. Okay. New TPO above the overnight high. Can they turn it into support? For what it's worth, guys, if I wasn't live streaming right now, I would not be sitting in front of my computer. I would just put a notification bell at the C period high and the D period low, and I would just walk away and wait for the dinging noise to bring me back. All right, guys. It might finally happen. Something might finally happen. NQ about to break that poor high. We, of course, expect some short covering. We expect a little boop, boop, boop once they break that poor high. But the question is, when they come back down, is there new buying? If not, the chop will continue, both markets. If there is new buying, it gets bullish very, very quickly. Not trying to play Notre Dame, but I could totally see them repairing the poor high, then failing and pulling right back in, and not taking the ES to its low. So be cautious as a bull here. Okay, so there's the repair of the poor high. Technically, the NQ is now one time framing up, which is bullish to see. We are looking for confirmation of that by them being able to turn this area between the opening price at around 17,722 and the overnight high, 17, we'll say 30. We're looking for that to become support. If they get some short covering and they come back down and they can hold that support, that is bullish for continuation higher. So let's see what happens. Here comes the short covering. And then do we get new buyers? Charles, shouldn't you just instantly be bullish? You talked about being a cup earlier, or being water. You know, we're one time framing higher on the Q. Shouldn't you be bullish? Well, no, because I'm an ES trader. And with the ES failing to find support above the overnight high earlier this morning and leaving that poor high behind, it is too early to get bullish on the ES. It is still inside the initial balance. So I can use the NQ as sort of a signal as to what's happening, but not to get into a trade. I must see it happen in the ES to be able to get into a trade. So both markets, can they turn the overnight high into support? Fred says, if the ES breaks out of the initial balance, it is best to wait for a retest of the initial balance before taking a position. Yes, but if the ES breaks the initial balance to the upside, you can buy any support anywhere. It doesn't have to be the B period high. Just once the market is one time framing, because of what we talked about earlier, half the participants are wrong, right? So whenever it breaks the initial balance, it probably won't wait around, right? It's probably going to just go. Whichever way it breaks, it's probably just going to make a quick move. So if you don't catch the first initial move, wait for a pullback and buy support wherever it is. It doesn't necessarily have to be that B period high or that A period low. But for now, we just had another look above and fail of the overnight high, another failure of the ticks, further confirmation, the chop will continue. If you're an NQ trader, you are looking for them to hold this support, and I would pretty much use the halfback as if it were cessation. If they're going to keep this momentum going, they really do need to bring in the buyers right now up here, because another look above and fail of the overnight high is a sign that this was just a move to take out that poor high. That's all they needed to do was just repair that poor high. It wasn't actually real momentum. Okay. So if you're a buyer on the queue because of the trend, you need them to step in and keep that momentum going literally right now, or we're going to get more chop. But the ES is still completely neutral. No one's in charge here. Sean says, iceberg wars in the ES? Yes, sir. Bot shenanigans. Let's just look at some of the large stops and we'll have some fun. Okay, let's scroll back to the beginning of the day. Market works its way up, takes out 400 stops, right? Works its way down. Nothing major on the downside. Comes back up, takes out another 150 stops. Comes back up, takes out 190 stops. So this is just shenanigans to just squeeze traders that are trying to front run the move. This is what we talk about with having to have patience. There was nothing wrong with getting bullish this morning in the A and B period, because there was absolutely a chance that the market could have found support and continued higher. But once we realized that that wasn't the case, which was on that look above and fail that came back down and did not find support, right? We have this concept when what should happens doesn't. We should have come back down and found support. When we didn't, that's it. The market is neutral. There's no information to work with at that point. So all it's doing now is just squeezing everyone it can on both sides, getting as many traders long and as many traders short, and just driving us all mad. Somebody brought up the idea of waiting for the bond auction at 1 p.m. I guess they were right. I am surprised, but that's what's happening. They're just going to get as many participants long and as many participants short as they can. And then likely the second that news breaks, the market makes a big move, squeezes half, and gets continuation. Think about it like a jack in the box, right? That you're winding it up and winding it up and winding it up. And eventually it's going to break. That's what they're doing this morning. They're winding and winding and winding, and they're building more and more tension so that whenever it breaks, we can't know when, but whenever it breaks, they can get some follow through, squeezing half the participants. Very frustrating for a day trader because there's nothing to do here but wait. I picked the worst day to go live on the public YouTube. I really thought we would get something this morning. Truman said, you said poor low was when the reverse at an exact level. I thought that was weak and poor was lack of excess at the top or the bottom of the range. It's the same thing. So we define excess, meaning the amount of distance that you want from the high or the low to be at least 2 TPOs. Okay. So that is at least a point above or below the high. So that's good excess. So for example, the B period has 3 TPOs above the high, or at the high, you know what I mean? So that's good excess. So it just means it's a good high. It doesn't mean we can't come back for it. It just means for now we don't need to, but we have less than 2 at the low. We only have 1. So that is no excess down there, also called poor. When I described it as the reversal, that was explaining why it gets poor. It gets poor because the bots want to convince you to go long, convince you to go long, convince you to go long, so they can build that liquidity down there, which is, by the way, what I still think is happening. But obviously I can't take a trade for it. Too much uncertainty. DNK says NQ failed to trend. Did they hold the overnight high? No, they did not. So technically, air quotes, it is still one time framing. But again, there's always what should happen. And when what should happen doesn't, it tells you the opposite. Once the market started one time framing higher, it should have been able to hold support. It should have been able to stay above that opening price. The fact that it couldn't tells you that's not what's happening. It's not trending higher. And if it's not trending higher, what is it doing? It's just going sideways. So that tells you they were just coming to repair that poor low. They were just coming to take out those stops, and it's over. What was happening is done. And so now we're back to chop. We're back to winding up that jack in the box even tighter. If you wanted to go long here, I would be okay with it, right? Let's say you think this market is going to go up and make another new high, right? You could get long in here and you'd be taking on much less risk than your potential reward. That is acceptable to me. You have the trend and you have an opportunity to get in with very little risk compared to your potential reward. But I personally would never get in that trade because that look above and fail would make me think we're not really one time framing higher. So why risk the money? But to each their own, Sean, appreciate you, brother. At least one of us is getting something out of this. So here we go. Round 4 of the low. Do they bounce again at an exact level? Are they going to get more stops? Let's find out. There you go. Look at that slingshot. Poked up, took out 190 shorts, poked down, took out 266 longs. And that jack in the box gets tighter and tighter and tighter and tighter. So same as before, I'm watching this node down here just below the lows, looking, does it spoof? As price gets closer, does it all disappear? Or does it get darker? Do new buyers start to put in orders there? Let's see what happens. Also looking for an iceberg to randomly appear right at like 11, right in here. If another, there it is. Look at that, gorgeous. See how it spoofed? See how it disappeared? And then instantly, there you go. Now we get to squeeze every buyer. Look at that. Look at it, folks. Half the participants are starting to freak out. And those half are buyers. So now the market is one time framing lower. That is bearish to see. So I am looking for resistance, which to me is now sellable, as the market is likely to head down and test the 4,900 level. Now, it's not going to go in a straight line. It's going to be extremely choppy, but the probabilities are now in the favor of the sellers for the ES. So somebody asked earlier, how do you use heat map? This is the way. Okay. So all morning, there's been tons of liquidity sitting in here above and below price. And they use that as support to reverse the market, as resistance to reverse the market. But as soon as they got what they wanted, as soon as they took out that low, the liquidity disappeared up here. The liquidity disappeared up here. The liquidity disappeared down here. So we know none of this is real. It is all just bots trying to get the market long and short to build up that momentum. It was all a game. Ed says the market likes changing its mind. Yeah, I mean, that's the very definition of a market, is that it just keeps changing. It's the changes that cause the moves. Mackie says, I thought the drop from 49.13 to 10 was real orders. Well, yeah, of course it's real orders that are pushing the market lower. But I'm saying, how do I explain this? Like, sometimes you can trust things that the market is doing because it is actual changes in the market, right? Like something has happened that has made the market seem more valuable to its participants, so it's going up. If that's the case, you want to join them, right? You want to be long because if there's a real reason for the market to go up, it's going to keep going up, and vice versa on the way down. But then there are times where the market is going up and down and there's really no actual reason for it. It's just to get you to go long or short. So here's the way you got to think about it. Think about it like an art auction, okay? Imagine you're sitting at an art auction. The auctioneer brings out a painting, right? He talks about the artist. He talks about, how old the painting is and blah, blah, blah. While he's talking about it, every single person in that room is deciding, do they want to bid on that painting or not? But they all have different reasons to want to do the bidding, right? So one person might want to buy that painting because they think it's beautiful. Another person might want to buy that painting because they're a big fan of the artist. Another person might want to buy that painting just to spite somebody else in the room. Bob over there outbid me on the last painting, so I'm going to outbid him on this one, right? Everybody has a different reason for being willing to bid on that painting. So essentially what we have this morning with this grind and this chop, that is the market artificially convincing people to bid, artificially convincing them to go long. Look at this low. Oh my God, it's a triple bottom. You got to get long. Look, we just keep going up and going up and going up. You really want to be long. You're missing it. Don't miss it. Look, it's going to go higher. They did such a good job because they made the low that way on the ES and the high that way on the NQ. So as they're heading up to naturally repair the poor high on the NQ, they're convincing buyers in the ES to join the party, to bid, because they don't want to miss it, right? But then they instantly flip it the other way, and then all of a sudden the sellers they don't want to miss it. So it's just an artificial mechanism to get you emotional, to get you trading, to get your liquidity in the order books so they can eat it up. Eat it up. And that's all that was. This big node that's been sitting here all day, none of these participants were actually going to go long here. They just wanted to convince you that you should go long above it and put your stop below it so that they could come for your stops. They got one single trader for 565 stops. He was not the only one they took out. He was just the biggest one. But they took out a lot of people just now. And so now those buyers are gone. And if the buyers are gone, where's the market likely to go next? Cough, cough, wherever the buyers will be waiting. All right, guys. Well, with that, I think I'm going to call it quits on the live stream here this morning. Say goodbye to everyone and wish you the best of luck. I do believe we are pulling down into that 4,900 number. I do not believe we have to go any lower than that. I suspect there will be buyers waiting down there in that node, and the market will likely go sideways the rest of the day there. If that were to take place, if the market were to basically just spend the day rotating inside today's range, right? That would be a sign, bigger picture, zooming out a little bit on a more of like a weekly basis, that the market is beginning to roll over, okay? Because we had an inside day 2 days ago, so that was a sign the momentum was running out. If we have another one today, that will be another sign that that momentum is running out, increasing the odds that at some point in the future, the market needs a bigger pullback. But intraday today, I think we may be lucky to just test this node, and I don't know if we can get below yesterday's low. Of course, if they do, then it's very bearish for a larger pullback. But I would say take it one tick at a time. Do not fall in love with your trades. Sell resistance, buy support. It's going to be a slow, grindy, boring one. So with that, I will say goodbye. For those of you that are in the brigade, I will see you tomorrow morning. For the rest of you, I hope to see you in 11 days at the Mastery of Markets and Mind workshop. Remember, you got to sign up before Saturday to save yourself $100, and you can cancel at any time and get your money back if you want. Food for thought. Thanks a lot, guys. Have a great rest of your day. Bye.